that and more, I have with me Nadia Albilasi joining us, who's a market analyst and market analyst at Equiti Group. Nadia, thank you very much for joining us this evening on ET Now.
Hi, Sumita. Thank you for having me.
So, Nadia, how do you read this ratings downgrade? In fact, this is also coming in just after, the JP Morgan also stated that the growth in the United States is not moving towards perhaps a recession, but has slowed. How do you see this report coming in from Moody's?
So, Sumita, definitely we're seeing some weakness in the banking sector. This is not new news. We've already had a banking crisis just a few months ago. So it's only relatable to see that a few more banks will be downgraded, especially with higher interest rates. That's hurting the assets in banks, and that's also being reflected on the banking sector as a whole. Although we have seen tighter conditions, and even after the banking crisis, we've seen them put in place tighter credit conditions, we are still seeing downgrades made by big agencies like Fitch and Moody's. We've already seen a few weeks ago as well, Fitch downgrade the US bonds. So I think the situation right now would demand a greater importance to what's going to happen soon. Maybe a mild recession is definitely in the books. I mean, it's not, it shouldn't be that far with things slowing down in the US, with the labor market slowing down. Yes, there's still higher wages, but there's still a lot of people unemployed. There's still a lot of factors that are affecting the economy.
Right. And in fact, this is also coming in after Fitch also downgraded. It also came up with its own downgrades for the US economy. But how severely do you think this Moody's downgrade is going to impact the global markets, and should investors be worried?
Yes, investors should be worried and place caution. Definitely, this already hurts the sentiment, especially after sentiment was kind of boosted in the past few months, as we've seen a market rally. And now again, Moody's kind of closes the door in on us with a very dim outlook. So definitely, this is something to worry about. However, if markets price it in and they already see this coming, then there will be other tactics to deal with the situation.
Right. And I also want to ask you one question about the interest rate hikes. So 11 hikes have happened, and the Fed could still be expected to further tighten, considering that inflation is not within the tolerance band. So how can the Fed then deal with this challenge and perhaps restore the credibility of banks?
Right. So just like I said before, whilst big banks are trying to restore this credibility, they're still being reviewed for a downgrade, especially at times of higher interest rates. We are expecting another rate hike in September, especially as the labor market somehow remains intact. Yes, it definitely has dampened than the before statistics have showed, but it still remains somehow resilient. Also, the stock market remains somehow resilient and actually uptrending. For the past month, we've seen a rally in the past month, even though we have a very high interest rates, and they keep raising the interest rate ceiling as well amid a banking crisis and amid a debt ceiling crisis as well. So I think the US economy would definitely be strong enough to weather the storm. Yes, it's concerning, definitely, and we've seen that banking sector today and stocks have been jotted down. However, it's something that we've already experienced this year, so I think it will be a lot smoother to take in, rather than how we were surprised and shocked in March when this happened.
To talk a little bit about the US, Russia, China geopolitics and how that's playing out. Do you think investors are now trying to trying to seek alternatives to seeing dollar as perhaps a reserve currency?
I mean, the outlook on the dollar for the long term is also under the rocks right now, just because we know that, and we anticipate that the end of the tightening cycle is going to be near. we are seeing that China is making a new financial stability and financial stimulus rules and such to kind of give that stimulus to the economy. However, China is still recovering from the coronavirus from 2020, and we've seen today that imports and exports came marginally lower than expectations. So yes, there are a bit of other, let's say, economies that are trying to, get there. But ultimately, investment-wise, it's still the U.S. still becomes, the leader for the most majority economies. But we are seeing definitely places like India or China that are trying to build up their investment schemes to go hand in hand with that.
Right. Nadia, thank you very much for that comprehensive analysis of the impact of Moody's downgrade. In fact,